In local news, Singapore cuts its forecast for economic growth this year as the economy almost came to a standstill in the second quarter. The Ministry of Trade and Industry, or MTI, now pegs the full year growth at between 0% and 1%. It previously narrowed downwards the forecast range to 1.5 to 2.5%. Now, analysts said the downgrade was a gloomy but realistic one, given Singapore's sensitivity to global trade flows. For the second quarter, the economy grew by just 0.1%, the slowest expansion Singapore has seen in a decade. Now, to tell us more, I have business correspondent Xiao Bei with me. Welcome, Bei.
Hi.
And Bei, I remember the last time when we came on, we did talk about economic growth as well.
Yes, we did.
Right, so Bei, why did Singapore cut its full year GDP growth forecast?
Right, so we know that Singapore's economy is small and it's open.
Yep.
So that also means that it's quite affected by external uncertainties. And even though economists were actually expecting that these uncertainties would sort of stabilize, or the situation, things like the US-China trade war, people were expecting a deal to be reached at some point, and for the economic situation globally to actually look up by the second half of the year.
Yeah.
But this has not happened, and in fact, in recent months, we have seen more external factors that could weigh on the global economic recovery. So, for example, the trade dispute between Japan and South Korea, that has been escalating in recent weeks, and also we are also seeing a rising risk of a no-deal Brexit, which could lower consumer and business sentiment. So, even though we were looking at perhaps a broader range for our economic growth in the full year, this no longer seems to be the case, and that's why the MTI has narrowed the growth forecast downwards. So in the trade war, for instance, instead of reaching a resolution, we are looking at the 10% more tariffs on the remaining Chinese imports. It's likely to kick in September, and it's not surprising that we will also see further weakness in our economy for the rest of the year.
Right. Now, let's zoom in the manufacturing sector, because it seems that is one of the ones that has been hit the worst, right? The manufacturing sector contracted 3.1% year on year in the second quarter. Now, how is this contraction significant?
Right, so the manufacturing sector is significant because of the role, the size it has in our economy. So I think in last year alone, it contributed about 20% to Singapore's economy, and this contraction is significant because it is the third consecutive month, third consecutive quarter, where we are seeing like a sequential kind of shrinking. And in the full year, it also means that manufacturing is likely to see negative growth. And considering the size of the manufacturing industry in Singapore, I mean, it's a reflection of how things are perhaps not going to look so well overall. It's going to drag the overall economic performance. And I mean, it's a reflection of all these external factors that we are seeing as well. So slowing global demand for electronics, Chinese economy also not growing as quickly as before, and of course the impact of the trade war, which directly affects the supply chains that our manufacturing sector is deeply plugged into. But that being said, even though analysts, they're looking at hiring, people not hiring as much as before, maybe they're only hiring to replace critical headcount, but we are also not looking at widespread retrenchments at the moment. So it is more like a slowdown within the industry, but jobs are not likely to be lost yet.
And Bei, if you could just, on that last note, briefly tell us, is the government doing anything to intervene to help with the situation?
So the government at the moment has not rolled out any sort of fiscal policy measure, or the MAS today also said that they are not actually going to go out of schedule to review their monetary policy. But government has also indicated many times over the past month that they stand ready to support the industries, especially the most affected ones like manufacturing, and they also said that they are ready to support workers. And at least 3 cabinet ministers have stepped up to make Facebook posts, statements to show up confidence and show that people still are making investments into Singapore, and it's not all doom and gloom, because we're looking at new industries, we're looking into agri-tech innovation, to rather have a longer term game plan and not just be affected by the immediate concerns. PM Lee also said that the government will stimulate the economy if necessary.
Right.
In the shorter run, I think we're looking at more like a monetary policy easing, perhaps. If things continue to deteriorate, economists are suggesting that perhaps there will be fiscal package rolled out, but that's yet to be seen.
Right. All right. Thank you so much, Abe, for coming onto the show to tell us more about the cut that Singapore is making on its full year growth. For more news and videos, of course, on the GDP growth of Singapore, you can visit our website at www.straitstimes.com. Now, earlier on, we spoke to our regional correspondent, Elizabeth Law, on the situation in Hong Kong and, of course, the comments made by the leader, Carrie Lam, of the protests really shoving Hong Kong down a path of no return, and really what's the situation like, especially at the airport as well. And then we spoke to Bei. Now Bei share a bit more on Singapore's move to cut its full year growth in its economic forecast. That is all we have for you for our top stories of the day. For more news and videos, of course, you can log on to our website at www.straitstimes.com. Once again, I'm Haryanto. Join us for more stories on the big stories tomorrow.